Hello traders, the title of the video is how to use line charts to improve price action candlestick pattern trading. Alright, so you want to use a line chart, so a lot of traders, especially new traders, probably you never see use a line chart. In the old days, alright, talking about in the 90s, all right, up to 2000, people were using line charts. Only few people were using candlestick charts, all right. I remember myself when I started trading years ago, I was using a trading software that was using a candlestick a bar, and I sent email to them asking them to allow me to use a line chart, and they said to me, "No, George, you have to use the candlestick bar," because I didn't understand the candlestick bar. So over the year, everybody was is today everybody is almost using okay candlestick charts, but we can still use line charts, all right, line charts. Okay. Now what I've done on my chart here, you can see the black line that is mimicking the price, replicating the price, duplicating the price. All right, here is the moving average 4, exponential moving average 4. If you want a moving average that is quite close to the price, that is showing you, talking about this strategy that we are discussing today, how to use line chart to improve a price action and candlestick pattern trading. Use the exponential moving average instead of the simple moving average because it was more smooth and it will turn around better. So I place on my chart exponential moving at 4, and we're going to use that as our line chart. Normally, if you are using a line chart, you can have both line chart and the candlestick chart. So I'm leaving on here my candlestick chart, and I'm using the moving average 4, exponential moving average 4, as my line chart. All right. So what we are trying to do is that when we see a candlestick pattern that we know, all right, we will use that moving average 4 to help us improve, our candlestick pattern trading, our price action trading. One example is this one here. You can see that we have what we call a bullish engulfment. So price going down, going down, going down here. Now this long and bullish candlestick bar has completely engulfed this one here. This is what we call a bullish engulfment. So as this candlestick bar is closed, this one is closed, we want to look at our move exponential moving average 4, whether it's also turning. So if it's turning from an angle like this, you see, it's turning, is it? It's turning up. At the time when we have our candlestick pattern, our bullish candlestick pattern, that will give us more confidence to implement a different time frame trading method to buy it. So it's just a secondary verification after we have acknowledged, the candlestick pattern, bullish engulfment, not anywhere. So why you need to understand, because I don't want the video to be too long. Sometimes the video are long because I'm explaining more and more things. Okay, so sometimes that can annoy traders that are more advanced, and they are saying, George, that video can be 10 minutes. All right. So when you are looking for candlestick pattern, the first thing that you need to remember is that a pattern is talking about a location. Where is the pattern? I said it before. It's very important that I mention it. So you don't go around looking for candlestick pattern anywhere, anyhow with this strategy. It won't work. Must be, this is a good one because you see this is a resistance. In fact, it's a cycle point. This is a cycle point. Alright, that line that you see, horizontal line, is a cycle point. And the price breaks above it, is retesting here, and we have a bullish engulfment. This is a good place. This is a nice setup. If you draw again a trend line like this one is almost retesting that trend line too. So the pattern is not anywhere in a void. It's a common mistake that people are making. Now, when the pattern is completed, is our moving for also turning. It doesn't mean that because it's turning, definitely the price will go up. It's just helping us, giving us a bit of boost, another secondary verification. It has a high chance to go up if our moving average 4 also is turning. So we don't have 100% of chance that it will go up. If we have 70% of chance that it will go up, then it's good. We are willing to trade that using different time frame trading method to control it. That's what I'm saying. It was helpful here, yes or no? Helpful, helpful. All right, look at this one. Look at the price action. Price was going up, pull back again to the moving average 50. We have what? A kind of a doji, is a doji, all right, followed by a bullish candlestick pattern. This is a bullish candlestick pattern. Those two candlestick bar, the doji plus this bullish one here on the monthly chart. Okay. Where is the pattern? So very, very, very important. It was retesting, see, he braced the ball at this high, and he was retesting it, and the pattern is formed. So I like this one because it's a good place. Now we use our moving average 4. If it's also turning here after this candlestick bar is good close, the second verification can help us improve our candlestick pattern trading. Yes or no? It will. So you say, oh yeah, it's turning. I shouldn't be selling it. It has more chance to go up. If the moving average 4 is turning, it has more chance to go up than to go down. So I want to give priority to buy signal if it's turning up. I want to give priority to bear signal if it's turning down. You see? But I will not just buy or sell for no reason. I'll wait for a signal and I will enter the trade on the entry time frame. This is about different time frame trading method. If you are new to this topic, that's YouTube search the phrase mastering top-down trading method by 24 stock trader. Was it useful? Okay, you see here. So this is a candlestick bar. This time we are not using two candlestick bar, only one. If you understand this one, this is a one candlestick bar with a shadow piercing through a key level, usually a Fibonacci extension level. I don't want the video to be too long. I assume that there is a key level somewhere here, and this one is piercing. Not only that, this is, if you look at this candlestick bar, which is a doji, plus this one turning up, it's another, those two candlestick bars is also what we call one up, one down. One up, one down. I recorded a video about this at Joe Trio channel. One up, one down, candlestick bar on a monthly chart. Okay? So now, how do we use, okay, line charts to improve price action, candlestick pattern trading in this case? So, more experienced candlestick pattern trader for this particular pattern, a candlestick bar with a long shadow piercing to a key level. Personally, I will enter the trade before the moving average 4 will turn around here, because this is the advantage of this particular candlestick bar. All right, it's a leading indicator for the price action. All right, so more advanced traders will probably be in the trade. Or you see this one, how it went down fast with a long tail. It went down very fast. But suppose you are not experienced trader, and you see those two candlestick bar there. Okay, you see it's looking bearish, one up, one down, and you want to sell it. You may say, all right, I'll wait until the moving average 4 turn around. So after this candlestick bar is closed, your moving average 4 exponential. I haven't said simple, my friend. I said exponential. Okay, I'm talking like this to get your attention, okay? All right, standing around. Then you will implement a top-down trading method to sell. So you will be selling after this candlestick bar is closed. So was the line chart useful to you in this case? All right. Will you recommend to traders to combine price action and candlestick pattern trading with the line chart. So they will turn around, many of them will tell you that, George, I don't have a line chart anymore, I only have a candlestick bar, blah, blah, blah. Some trading software will allow you. I forget even how to do that now with this software, but I think you can. All right. Some people may say, I don't have a line chart. So all you tell them is, say, okay, don't worry about it. You don't have a line chart. Don't worry about it. Okay. Place exponential moving average 4 on your chart. And that will do the trick. So they will have the candlestick bar as I have here. And they will, okay, see the moving average 4 as a line chart. One last example here. In fact, 2 more examples. You see here. So prior was going up. Now we have what? A bearish engulfment. This candlestick bar. So when you see a bearish engulfment, is that the reason why I'm going to the left to see the left. I want to see whether we are at a resistance level, but there's no information for me to know whether we are at a resistance level. But I can use the Fibonacci extension to determine whether we are at a hidden resistance level. But no question about it. We have a bearish engulfment right there. Okay. How can I use the line chart in conjunction with the price action and the candlestick pattern? Bearish engulfment, I may wait for the moving average 4 to turn first, so probably this second candlestick bar must close first, and then I say, well, George also said that I must use a different time frame trading method to control the risk instead of just selling it, crossing fingers, leg, toes, hair, and everything that I can cross, hoping that everything will well. So use a different time frame trading method to control the risk. So you don't want to be right but lose. That's why we are using different time frame trading method, yes or no. And here it is, it went down, yes or no. Another example here, you see here, bearish engulfment. You say, all right, I'll wait for the moving average 4 to turn around. Understand, very, very important point. I need to stress on this. It's not because the moving average 4 is turning that the price will definitely come down or go up. Sometimes you will see some example where the price, the moving average 4 may be turning, but the price, the next candlestick bar will be up. But if you are using this strategy with a different time frame trading method, you'll be able to play it both ways. So this will conclude our discussion today about how to use the line chart to improve a price action candlestick pattern trading. If you have any question, suggestion, lament, blah, 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 feel free to put in the comment section. I want to hear from your thought, okay, anything you want to say. Not only me talking, say something in the comment section, please, all right? Put in the comment section, and in due course, I will be recording another video to answer your specific question, all right? If the video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it so much, you say, George, I watched only 1 minute of it and it's so disgusting, mark it down, please, okay? Think that is an essential tutorial. Feel free to share with your friend, okay, on the social media. Subscribe to our YouTube channel. Our YouTube channel is 24 Stock Trader, Digit 2, Digit 4 Stock Trader. Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to use a line chart to improve a price action candlestick pattern trading. Happy trading to you all, and I will speak to you soon. Thank you for watching.